Well, joining me now with more insights into what's driving the world's stock markets at the moment is Euan Rellie. He's Senior Managing Director and Co-founder of BDA Partners. Welcome to the show.
Thank you for having me, Rachelle.
So let's start with a snapshot of what's happening with global markets.
Well, the markets have been very strong, and despite geopolitical tensions, Western markets particularly have been really strong. The notable weak spot actually has been the Chinese market. Most of the stock markets in China are down 10 to 20% this year.
And speaking of China, talk about the role that the trade standoffs and these tariff disputes are having on global market performance.
To tell you the truth, most businessmen and businesswomen have been confident over the last year, and as a result of that, business numbers have been up, corporate profitability has been strong, but we are beginning to see the first concerns. I think a protracted trade war between China and the US will damage both economies potentially quite severely.
Now, on the plus side, we've seen that tech stocks have really been pushing Wall Street higher and prices continue to climb. But how sustainable is this momentum?
Well, we're seeing a lot of sales of consumer electronics globally. Software sales have been good. Semiconductor sales are good. We think the tech market has a long way to go. And, at every level of the economy, certainly on the consumer side, there's a lot of enthusiasm for spending money on consumer electronics. We also expect the Internet of Things to drive increased tech purchases in the corporate sector as well.
Now, we know that recently US President Donald Trump raised the issue of doing away with quarterly results. What are the pros and cons of this approach?
It's an interesting idea, and it's something that, in my opinion, merits some serious consideration. Traditionally, most markets, notably Europe, for example, have allowed companies to report twice a year. And that's quite different from the US, where companies are required to report complex financial results every 90 days, which requires, that puts a huge regulatory burden on companies. And actually the idea that, some investors are concerned that companies are looking too much to try and hit the next quarterly results rather than investing and planning for the longer term. And I think reducing the burden is a good idea. Having said that, the counter argument is that investors also want to see transparency. And there's naturally some nervousness about the idea that companies won't reveal as much as often.
Now, looking at Trump's massive tax cuts that were passed, how is that impacting corporate profits?
The tax cuts were massive for companies. They weren't so big for individuals. So companies this year will probably pay about $100 billion total tax less than they would otherwise. That means in the case of most companies, they're paying basically 30 to 35% less as a total tax bill than they used to. And of course, that's juicing their profits quite significantly.
And there's certainly been a lot of good news, because on top of that, you also have the US economy doing well. But are there any signs of a downturn that we should be looking out for in the longer term?
Well, it's very interesting. We had the terrible global downturn in 2009. We're 9 years into a global recovery now. And traditionally, the typical economic cycle has lasted 7 years. So this is already a fairly long and sustained recovery. Some people, some economists would argue that the recovery was very weak in the early years, so the cycle may last longer this time. But I'm already starting to see our corporate clients and financial services clients beginning to wonder when the next recession will come. If we're lucky, in my opinion, we may have 2 to 3 years more before a recession, but it's not inconceivable that a recession could be as little as 12 or 18 months away.
So then, as we look long term, what do you see as the biggest hurdles facing global markets?
I think geopolitical risk is quite significant. Whether or not you're a supporter of Donald Trump, his administration has taken a more aggressive stance in defending US interests, and those tensions are quite significant now, notably between the US and China, two countries who really rely on each other for trade. And I think if we were to see a really significant worsening of the trade conditions, then that would, quite likely bring economic downturn for all of those countries involved.
All right. Well, thank you very much. Euan Rellie there of BDA Partners.